Yesterday, the aftershock of the bank crisis resurfaced and Wall Street has hit by high volatility. Traders are again stoking fears about gloomy prospects. Today, the market will find the answer to the question, what to expect. The Federal Reserve has to make a tough policy decision, striking a balance among the hard landing, the default, and the mixed economic metrics. After a sluggish session on Monday, Wall Street had a volatile session yesterday. Stock investors shrugged off fears about financial instability. The Dow Jones lost 367 points or 1.08%. The Nasdaq also shed 1.08%. The S&P 500 showed the worst performance, closing 1.16% down at 4,119 points. The benchmark stock indexes traded higher in the New York pre-market. Futures on the stock indexes rebounded by 0.18 and 0.4%. Today, the market will find out the long-awaited clarity about the Federal Reserve's agenda for further monetary policy, so the indexes are likely to trade on a seesaw. The S&P 500 is expected to trade in the intraday corridor between 4,070 and 4,210 points. The major stock indexes fell by almost 1% for obvious reasons. Worries about the federal debt ceiling, the default prospects, and the pending Fed's policy meeting. High volatility hit the market, the banking sector went down, and the regional bank index dropped by 5.5%. The sharpest intraday loss since March 13, and the index printed the lowest level since November 2020. PacWest shares plummeted by 27.8%. Western Alliance shares slumped by 15.1%. Energy companies also put a strain on the stock indexes. Shares of the energy companies were vulnerable to falling oil prices due to default fears. Janet Yellen informed Congress that the Treasury Department would hardly fulfill its budget obligations by June 1 unless Congress passes the bill on raising the ceiling of the national debt. Joe Biden fixed a meeting with the policymakers on May 9 in the White House. The energy sector of the S&P 500 revealed the worst performance, having lost 4.3% yesterday. The financial sector fell by 2.3% with the second worst intraday losses. Starbucks shares shed 2% after the company released quarterly results. Futures on the stock indexes rebounded a bit on a Wednesday after a sell-off yesterday. Despite some recovery, it's too early to predict a steady uptrend. Everything will depend on the crucial event, the Fed's policy decision on interest rates. Traders are most interested whether the rate hike today will be the final in the cycle. The Federal Reserve has limited leverage in light of the recent bank crisis. Still, the US Fed assures the market that the collapse of a few banks will not escalate on a global scale. Besides, the Fed cannot neglect the threat of a technical default and political pressure. Meanwhile, government jitters are getting worse, and economists from the White House said that another rate hike would affect the banking sector. On the other hand, the fall in oil prices this week to the lowest level in than a month cements hopes for easing inflationary pressure. Oil prices have tumbled by 6% in 3 weeks and have plummeted by almost 30% in annual terms. The global economic picture remains mixed. The global economy is losing steam. Inflation is still way above target levels of central banks, being more stubborn than expected. Employment metrics are also confusing. The US NONFARM payrolls are due on a Friday. JOLTS job openings released yesterday showed that the ratio of vacancies to jobless people seeking employment fell to the lowest level since October 2021. ADP employment report released today caught the market off guard. The U.S. private sector added 296,000 jobs in April, twice bigger than 142,000 jobs created in March, and much more than 148,000 in the consensus. It's the strongest employment growth since July 2022. At the same time, the report showed a slowdown in wage growth. Wages of those who change jobs sharply slackened the growth from 14.2% to 13.2%. It's the slowest pace since November 2021. The Institute for Supply Management is due to unveil its PMI after the opening bell. The PMI by S&P Global and the Services PMI will be published later today. As for the corporate news, the regional banks such as the PacWest and the Western Alliance are losing ground today. The shares dropped by 10.5% and 6.7% in the pre-market respectively. Ford Motors shares slipped by 0.8% after the company said that it would cut price tags on its e-car Mustang Mach-E. Shares of Advanced Micro Devices AMD sank by 5.7% because the chips manufacturer forecasted quarterly sales below flash estimates due to the weak PC market. Intel shares grew by 2.1%. Uncertainty about the U.S. economy dealt a blow to the U.S. dollar. Awaiting the Fed's policy decision, its index was trading at about 101.4% down from yesterday. The intraday Canada for the index is seen between 100.8 and 102.30. The US dollar weakened in the face of the expected rate hike by the US Central Bank. Apart from a looming economic downturn, the US dollar is sensitive to the prospects of the final rate hike in the cycle. Earlier, Fed policymakers said that further policy moves would depend on incoming data. A lot of the metrics prove a slowdown in economic growth and easing inflationary pressure. Still, this data is not enough to justify abrupt changes in monetary policy. The ADP data confirmed the obscure picture. The market is trying to puzzle out whether the Fed will decide on a pause or a dovish reversal. On the one hand, the regulator might maintain the hawkish rhetoric, citing high inflation. On the other hand, the bank crisis and the enormous debt ceiling could force Powell to act cautiously. Anyway, Powell's comments will determine the US dollar's further trajectory. The Canadian dollar is extending its weakness. The USD CAD pair traded mixed in a midday. It settles at about 1.3627 in the New York pre-market. The instrument is likely to trade in the intraday Canada between 1.3570 and 1.3690. The loonie is wound down by a considerable fall in oil prices. Both benchmark rates slumped by 5% yesterday and closed at the lowest level since late March. Prices are carrying on with a slide today. Brent crude futures sank by 3% to $73.05 a barrel. WTI futures dropped by 3.5%. Morgan Stanley downgraded its forecast of Brent crude to $75 a barrel by the year end. And the government data on the U.S. crude inventories will be released only later today. The oil market is also bruised by the fears about the banking sector and the U.S. economy. If the U.S. Fed keeps its hawkish rhetoric and maintains the status quo, further rate hikes could derail economic growth and reduce energy demand. Another risk for the loonie is the widening gap between interest rates in the United States and Canada. The crypto market managed to recover amid the aftershock of the bank crisis. However, popular tokens are trading under pressure today. Bitcoin traded steadily in the midday at around 28,600, but it sank by 1.2% in the pre-market to 28,300. Altcoins are traded in the red before the opening bell, and they lost from 0.4 to 3.7%. Crypto investors are also anticipating the Fed's decision. The lack of trust in the banking sector could provide crypto assets with extra support. Worries about economic stability assure investors to add alternative assets in their portfolios. Cryptocurrencies belong the highly risky assets, but they are winning in favor with investors, judging by recent moves of popular tokens. As for the industry news, Coinbase launched the international exchange platform for crypto derivatives. The exchange will let institutional users in eligible jurisdictions outside the United States trade in perpetual futures. The intraday outlook for Bitcoin remains the same. It's expected to trade in the range between 27,750 and 28,600. If one of the borders is broken, the price could either go down to 27,200 or climb to $29,200. And this is the view on the trading day in the United States of America from InstaForex analysts. Our team wishes you a good day and enter it with a profit. Trade easy with the InstaForex and see you tomorrow on our channel.